Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D trades, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade. We'll get you expert views to find out where exactly can money be made in this current market setup. First up, a quick check on how the markets are moving as we inch closer to the day's close. So handsome gains on the Nifty and the Sensex, 0.7% of a rise, 19,530 currently on the Nifty pack. The Sensex up by 525 points at 65,766. And when we look at below the surface as well, the broader markets in fine fettle, you can also look at the sectoral indices that are doing very well to overall boost the sentiment in this trade. So you can see the mid caps are up by 0.8%. Similar gains on the small cap 100 indices. The Nifty Bank is getting the support from all cylinders, be it the private banks, be it the PSU banks or the financial services, all of them lifting the Nifty Bank index. Although it was slightly choppy in the last 2 hours or so, it's again come off the day's low point and is up by 1% odd or so. It's the PSU banks that have in fact slipped 0.5% lower in trade, and that's why you can actually see those slight choppiness, as far as the Nifty Bank is concerned. It's the PSU banks that are actually trading at the day's high. It's the private banks, that's actually inching towards the day's high level. So keep an eye out on the private banking space. Other than that, the other sectors that are buzzing, IT, of course, apart from financials, that is moving the index higher. Apart from this, we are also seeing some gains coming in on the consumer durable pack as well. So you can see 1.5% up move on the Nifty IT pack. Apart from this, you're also looking at gains coming in on the pharma pack as well. That's up by 1% and some gains coming in on the realty pack, on healthcare, as well as the metal pack is also looking at some gains coming in. Is the PSU banks and the FMCG that's now looking a little sluggish, and the auto stocks that have drifted lower in trade today. Let's look at the top gainers and the losers list to see where are the gains coming in from. Cipla stays put as the top of the chart, 3.5% uptick today. Of course, big corporate development and the news flow. IndusInd Bank, Tech Mahindra, these are the top gainers. On the downside, you have SBI that's down by 2.6% after the earnings just now. 574 currently. Bajaj Auto, BPCL and NTPC that are down in trade. But let's welcome our guest on the show. Ruchit Jain joins in. He's the lead research analyst at 5paisa. Ruchit, welcome to the show and thank you so much for taking the time out. First up, your sense on the markets per se. We did see that, 10 days of consolidation happening. The markets are sharply lower over the last 2 odd trading session and the bounce today. How are you looking at this kind of a setup and what augurs well for the markets going forward?
Yeah, very good afternoon, Sakshi. Well, Sakshi, if we see last 4 months when the markets had rallied in the month of April, May, June, and July, it was primarily because of the FIIs buying, where we had seen that FIIs were net buyers in the cash segment. And even in the index futures, initially they witnessed short covering, but then later on they also started forming decent long positions. Now, just to give an overview of how much quantum of buying was there by FIIs in these last 4 months, in the month of April, they had bought equities worth around 5,700 crore. But in the month of May, they went on aggressive and bought equities around over 27,000 crore. Then again in June, they bought equities of about 27,000 crore. And in the month of July, they were biased to the tune of about 14,000 crore. So all 4 months, we have seen consistent FIS flows in the cash segment, and index futures also they were biased. Just recently in the month of July, they have had about 70% of the positions in the index futures on the long side. But what has happened post this expiry during last week's Thursday, when we witnessed that they had rolled over lesser amount of long positions. The long short ratio at the start of this August series was just 58%. And from that 58% ratio, last few days they have formed short positions. They have added more short positions and unwound some of the long positions. So that 58% ratio has come down to 40%. So now amongst the positions, only 40% are on the long side and 60% of the positions are on the short side. And even in the cash segment, they are not buying. They have sold very some amount. The amount of selling is less, but at least they are not the net buyers in the cash segment too. So I think this data in last 1.5 week has changed drastically. This may be due to the overnight news flows that we saw from the US post, which the dollar index went up. Even USD INR is trading around that 80 to 70. If it goes above 83, I think that would be a concern majorly for equity markets as well. But I think the data remains important. That the data is not similar to what we have seen in last 4 months. So I think the August series won't be too easy for the market participants. The way one side up move that we have seen in last 2 or 3 months, we won't see such kind of August series. at least till we don't see again short coming or buying coming in from the FI's front, I think markets would remain choppy on both the sides, and such volatility is likely to continue in this August series. So on the higher side, we would be watching at resistance around 19,600 to 650 range. This pullback move which we have seen since yesterday's support of 19,300 could get extended towards that 19,600, 650 in the earlier part of the range. But I think that would be good levels where at least short-term traders should look to lighten up some of the positions. And this would be a market where you should not chase the up move. Once the move has come, don't run behind the move after the move has already come, but rather wait for declines. And whenever markets comes around support, that would be ideally good levels to enter on the long side. So as far as support is there, 19,300 to 19,220, this is the major support range. And on the high side, 19,600, 650 would continue to be the resistance side.
Okay, let's get down to specifics now, Ruchit, to understand where are opportunities emerging for investors. Let's start off by asking you on SBI first, because just now the company has released its earnings, and if we see the profitability for the company has really boosted up quite sharply, 178% of a zoom to 16,884 odd crore rupees. The asset quality for the bank has improved as well. The gross non-performing assets for the bank are at just about have declined to 2.76% versus 3.91% as well. So overall speaking, we're looking like, the net interest margins also stood at 3.33%. There is an improvement there as well. Looks like on larger parameters, the earnings are pretty good. But the stock has declined about 3 odd percent. Would you say this is largely due to profit booking, or is there anything that you have read through in the earnings that investors should be, cautious about?
So I was just looking at the historical data of SBI, along with the results movement, and what we can see that in last, I think 2 or 3 quarters, one thing has been similar, that the SBI has posted good results and the stock has went up on the result day itself and thereafter as well. So I think somehow the expectations were already built up, built in the market price this time, where the stock had recently rallied from 555 to 620 ahead of the results itself. So what happens many times when you see that the stock prices have seen a rally before the outcome of the event, and when the event outcome comes, although it comes positive, but largely traders who have already built positions, they look to square off their positions, I think that's what we are seeing today in SBI. So I think much of the numbers are good, but much of them have already been factored in the recent rally. So I think from short term, I don't think based on the numbers we would see any significant movement in the stock. But just after today's move, it would be more of how the market reacts, how the banking space reacts. I think that's how the momentum would go going ahead. Now 570 is a very crucial support to watch out for. In case if the stock breaks that 570 mark and closes below that, then I think we should see an extension of this correction towards its next support, which is placed around 555.
Okay, and this is perhaps the reason why the PSU banking index is also, slipping, with the largest weighted stock on that one, SBI, also trading down. But in the overall PSU banking basket, is there anything that is looking positive to you on the charts at these current levels? Would you want to take a bet even now?
So I think if you look at PSU banking basket, irrespective of the results that other companies post, SBI has always been a heavyweight who takes the leadership and drives the price movement of the other stocks as well. So if SBI goes up, some other companies have not declared that good results, then also along with the momentum, the other stocks also go up. But this time, if the stock is going down, if SBI is correcting, then I think that would have an impact on the other PSU names as well. And at least in the short term, we won't see much buying interest in the stocks coming till we see leadership again coming in from SBI. So rather than doing any kind of bottom fishing over here, I would wait for this heavyweight to again change its direction. And in case we see some kind of strength coming in the SBI, then I think it's better to go with the other PSU banking names. One can keep on radar names such as PNB, which has recently done very well, very good buying interest was seen. Even the numbers were good. So I think PNB at declines, should be one stock amongst the PSU banking names, which one can keep on radar. But as I said, leadership always comes from SBI. Once this leader starts an up move, then I think you should look for bottom fishing in the other names.
Understood. Let's shift gear from banking to autos now. Again, another space that is looking at some weakness in today's trade. But let's talk about one of the outperformers, and that is M&M. The company has also released its Q1 earnings. The profit has nearly doubled to 2,774 crore rupees. The revenues have jumped 22% on a year-on-year basis as well. In fact, the profit has beat the street estimates as well. On the EBITDA, the operational level as well, we've seen 3547 crore rupees that the company has clocked in, which is a 46% jump compared to the same quarter last year. And in the automotive segment, the company has recorded highest ever first quarter volumes that are up 21% over the previous year's same quarter as well. The open bookings for SUVs have also stood very strong at 2,81,000 as of the 1st of August. And strong auto demand is being indicated right there too. So positive earnings for M&M as well. And we've seen the way the stock has really outperformed the auto space as well in the Nifty Auto Index. Your thoughts post the earnings 1463, the stock is down 0.5%. How should one be looking at the stock now?
So short-term trend seems to be in a corrective phase. Off late we have seen that the stock has already seen a good run-up. And post this recent declaration of M&M's investment in RBL Bank, we saw a lot of unhappiness was there amongst the traders and investors, due to which we witnessed a significant gap down opening recently on 27th of July. So I think somewhere till this corrective phase is high, which is around 1505, is not taken up again. So I think the stock won't pick up so much momentum on the higher side, irrespective of good results that they have posted. On the lower side, support is around 1400 to 1380. So I think one should wait for further declines towards that support. If it comes, then I think one can look for doing some kind of bottom fishing. But at current levels, I won't advise to buy the stock. Either let it give a breakout above 1505, 1510 again, or a dip towards 1400 to 1380. It should be a good opportunity where the risk reward ratio would again become favorable then.
All right. Well, many thanks, Ruchit, for being with us on the show and discussing all these insights with all our viewers as well. Several pockets in the stocks that are in focus, how to trade them after the news flows and the earnings flows as well in this current space. The Sensex up 470 odd points. So looks like we are headed for a positive close after 2 days of declines on the street. Looking at the Nifty, 133 points higher at 19,514. So we are back above the 19,500 mark. That should heave a sigh of relief for some of the bulls right there. So we'll keep an eye out on how the markets trade going forward from here and what are the developments that may impact the market movement next week as well. Do stay tuned on to Business Today TV to catch all those updates, and don't forget to subscribe to the channel. Continue to engage with us on our other social media platforms where you'll get a lot of buzzing news from the world of business and stock markets.
Hello and welcome to Business Today Television.